Korea's financial regulator just tightened the lending rules, and now that squeeze is showing up in unexpected places. A new report says 120,000 borrowers were pushed into illegal private loans over the past year. At the same time, major banks' overdraft account rates are climbing back above 5%, even as lending caps get cut. And two mid-size financial groups just rejected a merger bid that could have reshaped Korea's banking map. It's Wednesday, July 29th. Let's break down what's happening in Korea's financial sector. Seoul has spent the past year tightening the debt service ratio, or DSR, cap to cool household borrowing. That squeeze cut off legitimate credit access for lower-income and self-employed borrowers who no longer qualify at banks or card companies. With fewer legal options, a growing share of that demand shifted into the unregulated private lending market. Here's what the numbers show. An estimated 120,000 people turned to illegal private lenders over the past year, according to a new report. Annual private loan usage reached roughly 1.55 trillion won, about $1.1 billion at current exchange rates, up from the prior year. Interest rates on those illegal loans ranged from 48% to as high as 120%, far above the legal cap. Major banks' average overdraft account rates climbed back above 5% this month, even after regulators ordered lenders to tighten credit limits. KB Financial Group and Google announced an AX alliance to build AI-powered work assistants for internal banking operations. BNK Financial Group and JB Financial Group both rejected a merger proposal from activist fund Align this week. So what does this mean for people watching Korea's financial sector? Earlier, we flagged the private loan surge. Here's what that actually means for you. Korea's DSR tightening is solving one debt problem while creating another, less visible one. For bank profitability and asset quality, the rate climb above 5% on overdraft products signals tighter margins ahead, even as regulators push banks to lend less to riskier borrowers. For compliance teams at foreign financial institutions operating in Korea, the private lending surge and looming smart contract guidelines both point to a regulatory cycle tightening on multiple fronts at once. That's today's AI Prism, Finance Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a WANAFRA award-winning series. We'll be back tomorrow.